Good morning, Zinger Nation. Welcome back to another episode of Benzinga's Pre-Market Prep. I'm producer AB. I got my man Dennis Dick hanging out backstage. It's your one-stop shop in the morning. Get all the news you need before the market opens. All the top headlines, stock moving headlines, what you need to know before the market opens. Let's go ahead and roll that intro. When we come back, we'll be talking Unity. We'll be talking more fallout from this airline story. All the top headlines you need to know. Without further ado, let's get the show started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, so yesterday, which if you watched Pre-Market Prep, if you were here with us yesterday, you had already known before the market opened that it was going to be a big day for tech, as Dennis called. The S&P, the NASDAQ, everything traded higher. Huge day for bulls. Nvidia hitting new all-time highs. Bitcoin hitting 52-week highs. But today, looks like we're giving back some of those gains. As you can see here, the S&P 500 trading down about 0.4%. Whoa. All right, just went up a little. Oh, no, back down. All right, going over to the Qs, also trading lower this morning, about 0.5%. Dow, which the Dow still finished higher despite an 8% drop in Boeing yesterday. So overall, all major indices finished in the green yesterday. But again, this morning kind of selling off. Could be another, just quick little reversal, some chop here. Let's bring my man Dennis on, see what he's been watching this morning. Dennis, how you doing?
Not too bad. It was a big win last night. Watched the game for our friend Joel Elconin, who texted me from the game, and he was on fire last night. Pumped. National champions, Michigan. It was a huge victory, so congratulations. Go Blue.
Yep, go Blue. Shout out to all the Michigan fans. Of course, Benzinga is headquartered here in Detroit. We have a lot of UMich representation at the company, including, Jason Raznick, Joel Elconin, Luke Jacoby, you name it. A lot of the real core zingers here are blue. So happy. That was what I was watching the game last night, Dennis, and I don't really have any skin in the game. I'm not a Michigan fan, not a Washington fan, but I was thinking in my head, I was like, you know what? Work will probably be a lot better for me through the end of the week if Michigan wins. So, I was like, my job will be safe if Michigan wins. So I might as well root for.
All the bosses are in good moods.
Might as well root for Michigan. So Dennis, I mean, from a macro standpoint, Jerome Powell, when we started raising rates to kill inflation, he was talking a lot about we're gonna see pain in the labor market. And we hadn't really seen it. Unemployment stayed steady, still at 3.6%, basically at pre-COVID levels. And now, though, we're starting to maybe see some more layoffs. I mean, I don't know if maybe companies were waiting for the beginning of the year for whatever reason, but I mean, right at the new year, we had Xerox announcing it was laying off a bunch of staff. And then we had another big one this morning. Unity announced it is laying off, 25% of its workforce. 1,800 employees, as you can see here, the headline in Benzinga Pro. Now, you've been in the markets a little longer than I have, Dennis, but if it were me and I'm just, going based off this and I hear a company's laying off 25% of its workforce, that's not a company I'd want to go out and buy. But I'm clearly in the minority here because the Unity stock is up 2.3% yesterday after closing up more than 3% yesterday. I mean, is this the type of market we're in, where when a company's announcing layoffs, saying, okay, they're doing some cost-cutting measures. I mean, look at what happened with Meta last year. Meta laid off, a bunch of staff last year, and the stock, that's not why the stock ripped higher, but it continued to do well. I mean, would you be buying this down here amid these layoffs?
It's been so, and you're making an accurate assumption here. It's been this type of market where they have applauded job cutting because obviously getting the cost down because they know demand has stayed strong. The problem here, not just with Unity, but the problem going forward is demand is teetering in some areas here. And we've talked about, this economy potentially going into a recession. I've kind of taken the recession camp out because I believe the Fed won't allow it to happen. That's the only reason. But you can see there's tweaks here in the economy. You can see Canada's been in a recession here for the last 6 months. 2 negative quarters of GDP. You can feel it slower in Canada. Not like it's crazy, like everything is collapsing. Jobs are still strong here. You can still get a job. But we're in a light little recession here in Canada. The U.S. would naturally want to go into that. Rates would start to bring us into it. But I do believe that the Fed will not allow that to happen, which is why I don't think we're going to go into a recession. But there's certain pockets here where we're starting to see demand just teeter just a little bit here. So multiple warnings last night. Let's take it outside the U.S. first. You got Samsung, which is warning overseas. But then take it back here. You get Microchip warning. Unity does 25% layoff to the workforce. When you lay off 5%, it's cost cutting. When you're laying off 25%, it's usually because it's a demand issue here. So I wouldn't be surprised if Unity actually ends up trading in the red here today. On this, I still have a small piece of this. I had a bunch of stock and I sold it. I have a small piece left. This company just doesn't seem well managed, though. So I'm almost thinking of just dumping the rest of it just to be done with this. I might move it into other things. And I'll tell you those other things I'm moving into because I'm going to unveil a new trading acronym here today. But just taking it back here, I think we can't just sit back and say, yeah, cost-cutting measures, this is going to be, the way, that this economy is going to, or the way stocks are going to continue to rally when they're laying off 25% of their workforce. I think we're going to move into a different type where you start seeing layoffs because of demand issues, and those stocks probably start to get hit.
Yeah, and I mean, I think you brought up a good point there, Dennis, where you said you could kind of start to feel the economy slowing in Canada. Which when we're talking about these macro things, I mean, the economy, it's what it does, right? It goes through these cycles where it's in a boom cycle and then might slow down. But I think it's important to recognize that you can have some of these downturns where there might be some slowing without it being this massive crash. I think the 08, 07, 08 financial crisis has kind of altered our perception where any slowdown in the economy, people freak out and think we're going to see this huge, massive recession and market crash and sell all stocks. Whereas I'm like, no, I mean, that's normal, right? You're going to see the economy slowing sometimes. And then
ebbs and flows.
Ebbs and flows. Exactly. So I think it's important to be able to play these without going straight to that doom and gloom scenario. And then let's move.
I want to stop you right there because it's something that we don't often say on the show. And when I say something bearish, people think it's all doom and gloom. And when I say something bullish, people always take it to the extremes. What you just said, perfectly encompasses what trading is all about. Trading those ebbs and flows and not going full on. Oh, it's going to be Harry Dent, we're going to have an 80% crash this year, or Peter Schiff calling for the crash for the umpteenth time. If you're saying something bearish, and you're as a trader, need to be able to trade both ways. You as a day trader, I'm not speaking to you long-term investors. If you're a long-term investor, buy good companies at reasonable valuations. We're going to try to give you some of those today. But if you're a day trader, you've got to be able to trade those ebbs and flows because if you're just long only, it's very difficult to make money in a year like 2022. Very, very, very difficult to make money in a year like 2022. In 2023, you probably did okay if you're long only. So, I mean, yeah, maybe 70% of the years, if you're long only, you're probably going to do okay as a day trader. But those down years can really be rough too. And those down pockets can really be rough. I do think if you want to trade as a business, you've got to be able to short stocks. And there's people out there who believe shorting is just flat out evil and wrong. It's what keeps the market efficient, folks. Shorting is necessary because we know when you get rid of shorts, you lose all your market liquidity and then you can't get out of stock. So that's why shorting is essential to this market.
Yeah, and I found when I'm struggling as with my trading, it's when I'm stuck on one way, when I keep trying to play the market bullish and it's in a downtrend and I can't find that break, or I'm trying to stay bearish and the market keeps going up. So it's important to be able to do both. I like to do both, but again, I think it's really easy when you get caught up in you have one sentiment where it's either bullish or bearish, and then you kind of are stuck doing that. But yeah, I mean. You're going to see guys where if you ever get bearish news, right, you're going to have the zero hedges of the world that are going to always make it out to be that, oh my God, the sky is falling, but it's not usually the case.
That's media.
It's
That's
media,
media,
right?
though.
That's gonna get the most attention if you
Yeah,
say, "Oh my god,
headlines.
the unemployment ticked up."
14% interest rates. Rick Santelli, or 12%, or whatever he was calling for, right at the TLT bottom, whatever he was calling for. I mean, that was headlines driven by CNBC. They drove that headline that interest rates we hit 5% and they were going to 14. That couldn't have been that was the worst call of the year. CNBC talks nothing about that now. It was the absolutely worst call of the year. Yes, Rick Santelli, you had the worst call of the year talking about interest rates going to 14%. But that's media driving headlines. What can we say? Cool. Maybe CNBC pushed them to say that. I don't know. But that was just a ridiculous statement. There was no way they were ever going there. Logically, it made no sense. Imagine we went to 14%. There's no economy left. The U.S. deficit's $34 trillion. How the hell are they supporting that? The interest payment at 5% is now the biggest expense on the taxpayers. Imagine it at 13 or 14%. So, I mean, it's just a ridiculous comment. But, so I went on a little rant there. But, I mean, this is the media. So you've got to watch what you see on CNBC. You've got to watch, even what we say. Sometimes we get excited and we maybe overshoot or exaggerate. But the one thing that I do well is change my mind. And you, as a trader, talking to the traders out there, are obligated to change your mind. Just staying one view forever. I'm going to be a day trader for 30 years. I'm only going to be bullish. You're an investor if you're doing it that way. Way different than a day trader, because you got to be able to feel the ebbs and flows of the market. Is 2024 going to be like 2023 straight up and rip roaring rally? I don't think so. Is every day in 2024 going to be up like yesterday? I don't think so. I think it's going to be a rougher year, but I think there's going to be pockets of strength. And when you identify those as long traders, investors, you identify those, but also take advantage of the weakness. When you see certain areas that are weak, don't be afraid to short those areas.
100%. Well, Dennis, moving on, we had another downgrade this morning in big tech, and that's coming from Citigroup to Netflix. Downgrades Netflix to neutral, announces a $500 price target. Netflix trading down in the news about 2% this morning. I mean, this was one of your huge winners from last year. If we look at the daily chart here on Netflix, you can see, just looking at 2023, started the year at $270 around there, ended the year at around $470. So anytime you have, this is what's crazy to me about last year's market, Dennis, is these huge tech companies, these, multi $100 billion tech companies. A lot of them are up like 100. You look at Nvidia, and it's these companies, like in terms of market cap, their moves. I mean, Nvidia probably added $300 billion in market cap yesterday alone. Like some of these huge mega cap tech stocks are trading like they're small caps. So for Netflix to finish up more than 100% last year, I don't know. I don't know if I'd be chasing it up here.
And it's lofty expectations to expect that to happen again.
Right.
So, you think about long-term stock market performance. It's 8% a year, folks. It's not 80% a year. It's 8% a year. So when you get these 100% moves up in stocks, a lot of times there's digestion periods. Sometimes it's just got a company that's just way undervalued and it's going to grow like crazy. In the case of Netflix, we also have to consider that this thing was just way overvalued when it got to $700 back in 2021. Then it overshot to the downside when it got down to a PE of 15, when I actually talked about it on this show, saying I'm adding to my Netflix position because a PE of 15 to 16 just seems really cheap for a company growing as much as Netflix. And I bought stock at $175. That ended up being a fantastic purchase. I ended up selling because I always sell too soon. You know how I am, about 330, 340, but it was a great one. This is, what you do is you buy those stocks at reasonable valuations. Netflix valuation is no longer reasonable, trading over 40 times earnings. So I think there's a cool off period maybe for it again, unless they come out with something and they start to grow earnings rapidly. So that's why I'm kind of with Citi here. I think neutral's a call. I don't think Netflix is crashing back down to 300. I don't think it's flying up to 700 though anytime soon. I feel like it's slightly overvalued here. Could multiple expansion go a little bit further on it? Maybe. But it had a pretty good year. Maybe you have a cool off year for Netflix.
Yeah, and I'm with you where I do like Netflix's management team. I think long term the company will continue to grow. But there are a lot of things that are kind of on the precipice for the company, whether it's talking about, bringing gaming or live sports to the platform, that I still think are like a ways away. to where the company, I think in the near term, doesn't really have enough catalyst to get me really excited about it. Because like you said, I mean, once the juice has already kind of been squeezed out of here, right? You've already gone up
I
from
think so.
270 to 500. So I'm not really going to get excited about this. I mean, looking at the chart, looks like you might have some, if we clear these levels, okay. But then is it really going to get all the way back to 700 with interest rates above 4%? No, probably not.
Yeah.
Of course, I mean, the way the market was trading the last 3 months of 2023, it looked like, sure, it can get to new all-time highs. Why wouldn't it? All tech stocks were going crazy. But now, maybe the market's getting a little bit more reasonable on these names. Another downgrade we had this morning in the airline space, JetBlue, coming from Bank of America, B of A, securities downgrades JetBlue Airways to underperform, lowers price target to $3. I mean,
There is another story happening here with JetBlue. And, you've seen some airlines, that have, bounced from the COVID lows. JetBlue is one that is actually trading below its COVID lows. And when you have stocks trading below their COVID lows, there's fundamental problems with the companies at this point in time. I mean, weren't even flying passenger planes.
I was going to say, I mean, the COVID lows when they weren't even
obviously there's fundamental problems here. I'm not an airline analyst. I don't follow it closely enough, but I do look at technicals here. And, like stocks like LUV bounced at the COVID lows. Stocks like AAL bounced at the COVID lows. JetBlue is now below its COVID lows. That's concerning. So I would just say I'm out because there's something else happening here. There's a lot of airliners out there. I'm not saying JetBlue is going bankrupt, but I'm saying it's definitely weakest of breed. I don't like buying weakest of breed.
So yeah,
breed,
there's
whatever you want to call it.
There's a still a potential merger, I believe, with Spirit. I guess is there maybe concerns that deal's not going to go through?
That's been going on forever. I mean, that's 2 years in the making. I kind of don't even consider that going to go through at all because it's 2 years in the making. I mean, Save was trading off of JetBlue for a while. They've kind of even decoupled at this point in time. I just, I don't think that merger is going through. And I don't know if that's the reason why JetBlue is trading down. I don't know why if that's the downgrade, if that was the reason for it. I didn't read the analyst note. I just think I just don't want to buy stocks that are trading. Write that down. If the stock's trading below its COVID lows, any stock really, there's issues. There's problems here. So I think I'm just staying away from stocks trading below their COVID lows.
That's a good rule of thumb. I'll notice that now when I'm pulling up charts and maybe try to come up with a list because, like you said, I mean, when the whole economy stopped, planes weren't flying, companies shut down their factories, and the market crashed, 20+%. If your share price can't be above that low 2 years later when the economy is super hot and unemployment's low, then I don't know.
You got management problems.
I don't know what you're doing yet. I don't know what's going on. But yeah, we talked about the big, obviously headline in the airline space yesterday with the Boeing panel that blew out on a plane. Emergency landing stock closed down more than 8% yesterday. And then, more fallout throughout the day that we didn't talk about. Because it hadn't happened yet. But when they started inspecting these planes, started finding more problems on the same model on that 737 MAX. Some United Airlines planes had loose bolts and stuff, which, I mean, like, coming straight off that news, the video of the door blowing off, that's the last thing you need if you're Boeing is to hear that, oh, we actually found a lot more problems in a lot of these planes. And UAL actually traded up yesterday and is trading up again this morning. I mean, I don't really know. I don't know how big of a deal this is going to be. My question, I guess, Dennis, is do you think there's any chance that this actually hurts demand over the next few months for flights? I mean, I don't love flying personally, and that definitely doesn't make me feel better knowing that, hey, some of these bolts and stuff were just left loose, like people weren't checking them.
Let's get some better checks involved here.
Yeah.
I mean, it's not fantastic news here. This is why we said yesterday, wait for the dust to settle. We don't know where we're going here. Now they're finding loose bolts. So I'm like, I don't wait for more dust to settle because I don't want to find more loose bolts.
Right. You buy the stock and then they find loose,
more
wings.
Loose
wings. Oh, this wing was about
loose
to fall.
Loose doors. Loose,
Yeah.
these planes are a little bit loose. Okay. So it's down $2 more. I think it's a no touch still. We're in news digestion periods. There's periods where major news comes out on a stock and you have to digest it, and more information is still disseminated to the market. We're still in news dissemination here and news digestion with Boeing. That is not an investable time because we don't know all the information. We don't know, like regulators step in and say, that's it. Take all these Boeing planes down. We find loose bolts on them all. We're going to sit them all down. And right now we're going with Airbus. We don't know. That could happen. And that could be on for months. So we don't know. So I think at this point in time, I'm not saying it's going to happen. I'm saying there is the potential for that to happen. And that's the risk. What happens, if regulators come in and ground a bunch more Boeing planes. Boeing falls another 10, 20 points. I don't want to eat that. And I don't think it's just going to bounce right back. Like maybe they say, we tighten the bolts and it's all cured. Maybe. But does it bounce right back? Or do people still say, well, why were they loose in the first place? So, and Boeing, let's talk about valuation here too. Valuation isn't crazy, but this is a company that has actually not been performing well even before the loose bolts and even before the other MAX issues here. We got a PE of 52 on this puppy, and that's because the earnings have fallen substantially from where they used to be. Could the earnings come back up? Yes. We also have a massive amount of debt in Boeing. Interest rates are still high, and they will have to service that debt and probably refinance that debt at some point in time. I haven't analyzed to see when their refinancing is due, but $47 billion in debt on a $138 billion company is not pocket change. So I think I stay away from Boeing at this time. It is not going to be in my acronym. I didn't call it NABA. I called my trading acronym NASA, which we will get to shortly.
Yeah, and again, we're going to be releasing some of these trading acronyms this week. You have your FANG, you have all these different acronyms out there, but we're coming with our own that, we're
going to have Joel do one. We're going to have AB do one. I'm going to kickstart it here today. Our buddy Tim Seymour came out with his last night on Fast Money, and I'm like, I'm going to come out with a trading acronym here too. And I'd already been thinking about it. You guys all know what the N is, and it's going to, tick some people off probably, but it's going to make some other people happy. And anyway, so we're going to get to my trading acronym here on the back part of the show. But so we're still doing news here. It's news time. Microchip, we just barely covered. We just mentioned it here, but I want to get into the details on this one, AB, because Microchip is trading down $3. This was a zinger here for a lot of stocks last night. Give us the details on MCHP.
So we have a potential merger in this space. So Stifel Nicholas, I'm in Benzinga Pro right now. It says remains a buy, down 3.5%.
Okay, so just talking the news. Sorry, I'm throwing you under the bus here. I'm talking about the preliminary results of 410. So Microchip, MCHP, provided preliminary fiscal year third quarter release results.
Oh, here we go.
And they said Q3 revenue was to fall 22%. Compared to what they were saying 15 to 20. So they already kind of warned. And they said it was going to be down 15 to 20. Now they're saying it's going to be worse yet at 22%. Microchip gets hammered on that news last night. I fell right out of bed. I actually went short the SMH right on that news. Like I just immediately hit the SMH, which actually worked out. I covered it already, but it worked out for a really good quick trade. Don't tell me you can't make money trading news. Microchip falls. And then all the other the chips, NXPI, falls in sympathy. Texas Instruments starts falling. On Semiconductor, ON starts falling. ADI, Analog Devices, starts falling. AVGO was down last night. It's still down here a little bit here. All those start getting hit. So MCHP kind of put a little bit of hit on. A lot of those chips had really good days yesterday. We know Nvidia, obviously, with its AI chips was driving the bus, but Nvidia still is driving the bus here this morning, which is a whole other story. But Microchip here putting a little hit on the other chip stocks.
Yeah, and I mean, it's almost kind of similar, I guess, to the, Mobileye last week said that they were, revenue was going to be down. I mean, that was worse because that was what, 50% the revenue was going to be down year over year on the thing.
Huge
so
hit.
Either way, like you said, when the company's already warning, hey, this is going to be a down quarter, we expect it to be 15 to 20%. And then next thing you know, they come back and say, actually, it's going to be closer to 22%.
Yeah,
it's bad. I mean, and I guess the one, positive thing is if you're bullish the stock, you can say, okay, well, they already lowered the bar for expectations. So now you're not seeing it get hit like as hard as Mobileye did because, you're seeing it down 3.5% because, again, that bar was already lowered. But still, when you lower the bar and then have to come in below that, not really what you want to see. Typically, you like to see companies, give that warning, get that price movement out of the way, see the share price drop, and then they come in and say, hey, actually, we came in line, or we actually did better than expected, which obviously not the case here for Microchip, which kind of in line, Dennis, with what, we only briefly mentioned Samsung earlier too. But this has been my kind of thought process thing I'm noticing in the tech world is outside of the best of breed. A lot of these tech companies seem to be struggling, kind of your mid-tier, I don't know. I guess you can't really call Microchip a mid cap because it's still a $50 billion company. But just your names that aren't your Mag 7 tech stocks seem to be having some demand problems right now. And I, do you expect that to continue? For a lot of years, you could just buy any name in tech, buy any name in the queues, and you were rewarded. Now it seems a lot more like, hey, some of these companies are starting to feel the effects from higher interest rates, maybe starting to feel some demand effects from a slowing global economy. Would you be kind of staying away from these mid-tier names in the tech world, or do you think there'll be a buying opportunity at some point?
I think you got to be selective in what you're choosing for 2024 because it's not going to be as easy as it was in 2023, especially at the last 2 months where everything just went up. It's just buy a stock blind and you make money the last 2 months of 2023. I don't think it's going to be that easy. I think you have to be a little bit more stock selective. I think you got to pay attention to the news and just try to, figure out, because there is going to be pockets of this economy that are going to start to slow. I mean, interest rates have taken their toll on a lot of different countries, not so much the US. We've talked about this before because they got those 30-year locked-in mortgages there, so people aren't feeling it as hard as they are in other countries where they don't have 30-year locked-in mortgages. Max banks, Canadian banks give out is usually 5. So, I mean, you're starting to feel interest rates in Canada. So the economy is going to start to slow in certain pockets. Again, though, with the Fed behind us, they start lowering rates. That probably prop stocks back up. But there's going to be earnings warnings, folks. We're not in Kansas anymore. We're not in just this boom, huge expansion cycle here. The reason the Powell pivoted, and he did, the reason he pivoted at the last meeting is because he's anticipating this slowdown. And you know what? It's probably coming. So get ready for it. You're going to see more earnings warnings. There's not going to be a lot of companies coming out and raise and beat and raise and beat. I think there's going to be a couple. I'll talk about those in my acronym. But I think overall, I think that you're going to see pockets of a slowdown here. So, and we're seeing it obviously with Microchip here today, also Unity, which, I think when you're getting rid of 25% of your workforce, it's because you're slowing down. I don't think that's cost cutting at that point in time. So that's just my quick thoughts. It was a question from the chat here, though, and I just want to address it. Somebody was saying, where do we get the Microchip news? So it's important in your Benzinga Pro to make sure you have press releases. So if you go to your sources, I don't know if you want to actually show this. Maybe you can show this, AB, because some people don't have this check mark. So what happens is you have Benzinga, our news desk, giving information, but you also have press releases where the company sends out a press release to all news media sources. Benzinga does have that as well. So if you go into your news and then you hit your sources, actually,
I have a tab, so right under news, I just go to press releases right here.
Yeah, and make sure so in your Pro that you have press releases in there, and you'll see at 410, you see it there. The from where it came from, the 410 Microchip provides fiscal. That was a press release from Global News Wires. So you've got to make sure you have your press releases checked in that box so that you're getting all the news sources. So that's where you get that news. So if you were missing that, it's because it was a press release. Benzinga Pro will summarize it, it's shortly afterwards. There'll be an article from Benzinga Pro on there as well a minute later, but we have to read it and then give you a quick summary. So our news desk physically reads it and then gives you our little summary of it too. But the press release is hot off the press. So, I mean, that's why you want to have that checked in there too. So you can get all this in your Benzinga Pro. So that's where you get it at the 410. And it knocked Microchip down significantly, and it knocked down all these other ones I said. NXPI, Texas Instruments, ON, ADI, AVGO all went down, and the overall Qs went down because of Microchip.
Yeah, and you can see that right here, Dennis. I'll zoom in so you can see right at 410. I mean, on the second this press release hit Benzinga Pro, and then, less than a minute and a half, 90 seconds later, we had the kind of recap of the press release just in the Pro headline right here, so that if you didn't want to have to go through the whole press release, you can wait for that. But like to Dennis's point, if you really want to trade the news, then you got to have this in right the second that it hits it. So make sure that in your sources, the press releases are selected. You can also sort through just the press releases right here on the tab. But yeah, you can select where you're getting the sources from, whether it's just the BZ wire, but I like to have everything on here. But Dennis, so yesterday we talked about how oil was trading down, could be a big day for tech. Today, oil trading higher. The USO up more than 2% pre-market. This comes just, after a couple down weeks in a row from oil, obviously trading down now to 67. I mean, the USO, if you look back just in October, was up at 82. And there's always these headlines. Like, I don't really follow the price action of oil on a day-to-day basis because like today, all the news organizations are saying because of tensions in the Middle East. Well, hasn't there been tensions in the Middle East for the past, 2 months in the past 5? There's always tensions in the Middle East. So I don't know how much that's really impacting the price action of oil this morning. But either way, do you expect, because oil's up today, that tech is going to have a down day? Do you think we have that type of inverse correlation
We
right now?
do. And this is a very good point that you're making. We have had this inverse correlation with oil for a very long time. And don't kid yourself, oil getting hammered yesterday was green light go for tech. Yes, I talked about rotation, stocks selling like Boeing, but also oil was a big tell. When you see oil getting hammered, it means, like that, again, we're worried about inflation, worried about all these things. But, you had multiple sectors where Boeing was getting hit, some of the industrials were getting hit, oil was getting hit. Natural rotation would probably be that they would buy tech, and they absolutely did. So that's why I was bullish on tech yesterday. We have a different market here today. Oil is rallying a little bit here this morning. It did bounce off those lows yesterday. So that is somewhat concerning. We don't want to see oil start ripping, because remember when oil had its rip, roar, and rally in the summertime? That was a very weak time for stocks. So, I mean, we've seen this inverse correlation with SPY, or whatever you want to look at, IWM, and oil here for a while. July, oil started to bottom and started to rally. And what did stocks do? They topped out in July and started to sell off till October. So keep in mind, AB is giving you a very good inverse relationship that overall, this isn't hold forever. But in the last year, oil has been moving inversely with stocks. So keep that in mind.
Yeah, and then, you also had rates start to move higher this morning, which obviously with the tech stocks, that's going to impact those as well. So you have kind of that double whammy. I don't know how much you follow the bond market, Dennis, but we had this hopefully isn't a Santinelli type of, I don't think it is, because I respect this guy a little bit more, but Bill Gross, former bond king, said, tweeted last night, on the bond front, the U.S. 10-year yield at 4% is overvalued, while the 10-year tip at 180 is the better choice. Can you walk me through this a little bit, Dennis? Because I don't really.
I'm not a bond trader either, so you're throwing me under the bus here
Okay.
too. I have not seen this tweet, so let's read it out loud together. Taking a bow not only for regional bank recommendations 6 months ago, he did make a good call on the regional banks, and he did, I forget which 6, but did pick out 6 regional banks. Maybe it was 4. It was 4 regional banks, and they all rallied substantially there. So Bill Gross did make a good call there. And I perfectly understand that because I trade regional banks all the time. I am not a bond trader, so you're going to ask me a tough question here in a second. 6 months ago, but mortgage REITs in December. I still like the CPRI for a merger ARB. Target 50 on the bond front. UST 10-year at 4% is overvalued. Wow. Okay. So he's basically just saying it sounds like the bond correction here, which we have, or the bond rally that we've had here, because yields have come down. Maybe he sounds like it's a little bit overdone at this point in time. That's how I'm reading that.
So he's saying that he thinks yields are going to go back up, so he wouldn't be
I
buying
think
the
so. I
bonds.
think he's saying we just went from 5 to 4.
Got
So, I
it.
mean,
And
it's been a pretty substantial rally here, and maybe we got to cool off a bit. That's how I read it, chat. If I'm wrong, let me know. I'm not a bond trader, but that's how I'm reading that. So I think he thinks bonds are going to start to, maybe weaken here just a little bit, an overshoot to the upside. I mean, it's been a substantial rally. I bought the TLT, and I was early buying the TLT. I bought it at 86 and went down to 82. I'm up over 10% in that in a month and a half. I'm up 10% in a conservative TLT investment. So, I mean, is it overdone? Maybe we're a little bit overdone. Maybe we need a cool off period. So I'm kind of with Bill here. I think rates, we're all thinking that just rates are just going to go straight back, down to 2% here. And we're going to live happily ever after, just buying stocks in a free money environment. Even if the Fed has pivoted, they haven't even started lowering rates yet. And it doesn't just mean that rates are going to fall off a cliff. Higher rates are here for a while because we have now determined and seen with proof that the economy can handle higher rates. So why would you all of a sudden just, lower rates back down to where they were and then just ask inflation to come back. So, I mean, that's on the short end. And obviously the Fed doesn't control the long end, and Bill's talking about the long end here. But the long end still is somewhat following what the short end is doing, what the Fed is thinking. So, I mean, I think rates maybe, the TLT just went from 82 to 100. 100 is a natural stopping point for it. And it's funny, you look at the technicals on the TLT, stopped right at $100. And that was where old support was for first half of 2023. TLT would not breach 100. We talked about it, and then finally collapsed. So it comes back up to that point of old support, becomes new resistance. So if the TLT sells back off to 90, do stocks start going back down? I think so.
Yeah, and so I think, so I think Bill Gross was basically saying, yeah, don't buy the 4%, 10-year now, because it's probably going to go up in the near term. And he's saying buy the, 2-year, get some money back for that while you're waiting for the other one to go up. I mean, like I said, I mean, Bill Gross, I don't follow the bond market that closely, but when he says something, he, is typically, I'll defer to my man Bill. I think Bill Gross knows the bond market, better than most people, including myself. So
I'll defer to Ackman.
Okay,
Ackman to be the best because Ackman actually called the bottom in the bonds. He covered his bond shorts, and that was the absolute bottom. So I will defer to Ackman for all bond information going forward. If that tweet came from Ackman, I would sell my TLT today.
Ackman might be a little distracted right now to be looking at the bond market. He's on his own little personal mission. But it is 8:36 a.m. Eastern.
Yeah.
We've got my man JR Romero hanging out backstage from T3 Trading. So without further ado, Dennis, let's go ahead and give JR our very special Benzinga pre-market prep welcome and bring him on the show. How you doing this morning? Welcome back to pre-market prep.
Good morning, team. What's going on, guys?
JR, how are you? Nice to see you again. Enjoyed our chat last time here, and I want to get your thoughts here because it's been a different 2024 than 2023. I mean, the last 2 months of 2023, everything rip, roar, and rally, buy a stock blindly and make money. First week of 2024 was like, it's not simple, not that easy. But then yesterday, it all seemed easy again here because everything started bouncing back here. We've had a little bit of bounce. Now, do you think this bounce continues, or was this just, kind of a dead cat bounce yesterday? You'd be selling this rally. What are your thoughts here? First, sum up the first week of 2024 trading, and then what do you see going forward?
Well, first of all, I want to congratulate you guys on that Michigan win. I am in Huskies territory here in northern Idaho, and a lot of teary eyes.
It's hard. That's the one thing, and I always say that in sports. I mean, it's awesome when your team wins, but as much, joy that Michigan feels here this morning, you got to feel for, obviously, the Washington fans here. They played a hard game. At the end, Michigan was just too strong, but I mean, it's amazing. You have 14-0 season. You're coming in here, you're feeling it, you're there, and then you lose in that final. I've been there, like when my sports teams too, and lost in the final game, and it's a heartbreaker. So we do feel for those Washington fans there, JR. But thank you very much for the congratulations. A lot of happy fans of Michigan here right now.
I want to see Joel in full face paint when he comes back.
He will be back tomorrow, and he'll have some stories, I'm sure.
That's great. Also, I have a vote on the new FANG designation. It's a gig economy, so I think we should just go with only FANGs. I think that's my vote for the new designation.
Okay.
All right. Anyways, so so we came in. Santa went ice fishing for a few days, and what I was looking at was the weekly charts on some of these cloud and cybersecurity names, as well as, of course, Nvidia. We've been waiting for that break of Nvidia through that, I think, 505.48 for several weeks now.
Yeah.
And, we went, I'm a big fan of waiting. I'm a big fan of waiting and letting things set up. So yesterday we went heavy on Nvidia right off the open. And it was the right time. The stars were aligned, and in the room we were focusing heavily on cybersecurity names, your CrowdStrikes, your Zscalers, and focusing heavily on Nvidia. You can see on the weekly you have a beautiful buy setup with a shakeout bar through a higher pivot low, and that weekly chart on NVDA was just telling me it was the right time on the weekly time frame to buy the shakeout. So we anticipated the breakthrough through 497 and added through 500, just anticipating that 505.48 break, and woke up with a Nvidia hangover this morning. So time to ring that register. I personally think that we're potentially, as far as the S&P is concerned, I called for a retracement yesterday, a bounce off, so a retracement from the pullback, right? And then we're looking for an ABCD pattern, so a second leg lower in the S&P. Potentially to retest at 47.0350. So I'm a big fan of two-wave correctives in the market. I think they're healthy, and so as far as the S&Ps are concerned, I'm looking for a second leg off of our pullback from, was it 48.40? I'm looking at the S&P futures, of course.
Yeah.
So this market excels in this new age of the market at really trapping longs and shorts collectively.
Yeah.
And so, when we were set to bounce yesterday, I told my room, guys, it's time for a technical bounce, but I'm looking for a retracement, not a new high.
Yeah.
And potentially, this pullback we've had is potentially leg one of two. So approach this market with caution. We're going to get a bounce in tech. We're going to get a bounce in a lot of these cloud and cybersecurity names. Just look at those weekly charts. You have really strong shakeout bars, but stay nimble, stay stealthy, stay nimble, because this is most likely a retracement off of a two-wave corrective. And
I think it's just again, we get over half of the year's losses back on one trading day, and it all feels really good. And we go again. 2023, we're going to just be off to the races, and the market's going to go up 40% this year. I just don't think it's going to be that easy. I've been kind of this could be a cooler year. I don't think we're crashing, giving it all back, but this could be a year that we just chop around a lot, and maybe that's going to be a good trading year if you're fading moves. So I think, you're fading the move from yesterday or 2 days ago where you're buying the dip. Now, if you're selling the rip yesterday, maybe you're going to be happy you were doing that too. Apparently overnight you are. So maybe 2024 is going to be the year of the fade trade.
I completely agree with you, Dennis. We had 12 years of a Bernanke infused quantitative easing cocktail. You know what I'm saying? It was very easy to play checkers in that market. Now we're playing a little bit more chess, and that means you have to fade moves. You have to really pay attention to the price cycle. And if you bought the market at the close yesterday, you're probably feeling some pain today. Right? If you're not anticipating those corrective moves, you're probably underwater.
And the news flow here too. I mean, we've got different news flows. We got Microchip that warned last night. Obviously, we're going to get the Juniper here news too. That's potentially going to get bought by HPE. So it's like good news, bad news. Like you got some retailers reporting pretty good holiday sales, and you have Unity cutting 25% of its workforce, which doesn't sound great to me. I mean, there's so much, news flow that has been coming out here in the first week or two, and then analysts' opinions as well. I mean, we know January is always a very big week. The first week of January is always huge for analyst ratings because they want to get their yearly picks out there. They want to get out there and say, their voices so they can make a name for themselves. But we've had a number of downgrades, which isn't, what we were seeing in 2023. Like a lot of analysts maybe just ringing the register here. And, whether you believe them or not, you have to respect them because they move price. So when there's two analyst downgrades of Apple last week, you want to know why Apple is down 10 points last week? Well, it got downgraded twice. That was the main reason.
Sure. Yeah, no, absolutely. The problem is if you're, like BMO Capital Markets this morning came out loaded for bear. If you're chasing those upgrades, you're doing it the wrong way, unfortunately, right? So it's going to be a challenging market. I'm really excited. People complain all the time, oh, it's so choppy, it's so range bound. I'm looking at the intraday chart saying, like, you've got 40, 50 point moves intraday every day. This market is a day trader's is a day trader's Disneyland. I mean, if you're a technical trader in this market, you're doing really well. You just cannot chase in a market like this. You have to know your levels, understand demand and supply, and really play the relationships, play the sentiment, and really stay ahead of the analysts if you want to make money.
So JR, right now, I mean, you mentioned Nvidia. Are there any other stocks that you'd be looking at for leaders? I mean, if we get more days like yesterday where, everything ends up green, are there other stocks you're looking at that could potentially break out here and be market leaders?
Yeah. So CrowdStrike and Zscaler, those two names particularly come to mind. CrowdStrike is about to break out on the monthly. It had a strong upgrade this morning. I believe CrowdStrike. Who came out on CrowdStrike this morning?
Let's see. Let's go
Morgan
to our
Stanley, right?
Morgan Stanley raises
Yeah.
price target to 304, and the stock's only trading at 265. So a lot of times you see these price targets kind of close to where they're trading at. This is a big, that's a good healthy return if it ends up hitting that price target from where we're at now. So going back to the chart, like you said on the monthly here, you can see we're have recovered beautifully here and almost at these all-time highs of 296. Still got a little bit of a ways to go, but do you expect this to basically just keep going up till those previous highs?
I do. I think the cybersecurity story is only going to get stronger and wilder. With the prevalence of AI and issues regarding authorization and authentication in a world where you don't know what's real anymore. Cybersecurity is going to take a front row seat. Cybersecurity is becoming an AI play very, very quickly. A lot of people have been focusing on the actual semiconductors, which is the right play, but many investors have actually undermined the importance of cybersecurity with the rise of AI, and I think that is going to be a fantastic play in the next year, especially coming into a year where we may have a high prevalence of cybersecurity attacks with all the political, geopolitical, and electoral instability heading our way. 2024 is going to be a wild year, and I think cybersecurity is going to be very much on the forefront.
That is interesting with how much attention tech gets and the big tech companies and Nvidia and whatever. I haven't really heard much. I mean, during COVID, a lot of these cybersecurity stocks were going crazy. I know Fortinet. I mean, if you look at Fortinet on the monthly chart, here when COVID hit, this thing was just going straight. It went, just straight up, and then obviously through some consolidation. Big red candle on the monthly here in August, down 22%. I don't know if that was a bad earnings report or something. But do you like any other name? And you mentioned Zscaler. Do you mention any other names in the cyberspace like Fortinet, that you think could trade with CrowdStrike?
I typically trade Arista Networks, CrowdStrike, Zscaler, and Palo Alto in a group. Now, Palo Alto has come in a little bit. We've seen some softening in the name, but if you look at the monthly chart and the weekly chart, you see what an incredibly strong, incredibly strong bullish move we're seeing. The challenge for me as a trader in a market like this, guys, and this is what I preach to my traders is, forget your theories, forget what you think is going to happen. Just look at the chart. I mean, bring up the monthly SPX chart. Just do me a favor.
I don't know if we have SPX in here.
Yeah, SPY, whatever you want to do.
Yeah, we're bringing
SPY. SPY's fine. And bring up the monthly chart.
Yep, right here.
Now, pretend that's Tesla on the 2-minute and tell me you're not bullish on that chart. You know what I mean? People have a lot of theories about what's going to happen next year. The measured move on that chart conservatively is 51.10, just off the handle. Yeah. So
it looks like we just had a 2-year consolidation period and we're ready to go again.
Exactly, right? And, I read the news, I talk to people, consumers are struggling. We have geopolitical chaos everywhere. And, our currency's being debased. I mean, there's a lot of serious concerns the economists are bringing up. And I talk to regular, folks, as my trading mentor used to call them, civilians, people who aren't traders. And we seem to just be climbing a wall of worry. But what the chart's telling me is that this market's potentially going much higher. So I think the challenge and the biggest change from pre-COVID markets is, you didn't have to deal with so much cognitive dissonance before, right? You were writing the weekly 21 for a decade, more or less, and now you're dealing with a much more volatile market where the cognitive dissonance between macroeconomics and technical analysis becomes so difficult that as a trader it becomes really challenging to look at the market objectively. So
Yeah, I mean it's like looking at this chart, JR. It's if we take out this high right here. I mean, it's like you said. It looks like we've got some ways to go.
Clear blue skies up there. I mean, when stocks are making new all-time highs, it's hard to be short. SPY has not made a new all-time high yet, though.
Right.
Yeah,
Close
exactly.
though. But yeah, like you said, you're targeting that 510 level. So we're going to continue to watch this. JR, tell me a little bit about this free ebook that you have that I'm going to throw the link in the chat for.
Well, it's the ebook is sort of a pathway for traders to really find themselves, find their style as a trader. I'm a big preacher in the methodology of the individual trader. People who try to follow other traders, people who try to trade technical analysis in a vacuum, all fail. Like, this is the one constant I've seen in almost a quarter of a century of trading. I'm really old. I'm 167 years old. So I've seen it all. And
you look good, JR, for that.
I'm on ginseng, Dennis. This is why. All right.
Ginseng. I'm going to write that down. I'm going to get some ginseng.
Write that down. So here's the thing. Traders who trade charts, who are chart readers, who just, trade a strategy in a vacuum, without really developing their own style, without finding a true edge in the market, tend to not succeed. So the thing I preach the most is really helping traders find their edge, whatever it is. And this is a kind of a scary thing for a lot of newer traders. But if you try to trade like someone else and you don't take the time to find your voice as a trader and find your style, you're most likely going to fail.
Yeah, well, again, we got the link in the chat. Make sure to go check that out. Free ebook, no reason not to. It's also in the description of this YouTube video if you're looking for the link. JR, it's been a pleasure to have you on again, and looking forward to having you on again in the future.
Absolutely. Send my best to Joel, guys.
We will. And yeah,
Thanks, JR.
He might be a little, I don't know, a little too excited after last night's game.
Can you blame the guy?
He's feeling the win hangover here.
Yeah,
for
the
sure.
win hangover.
All right,
JR.
Absolute pleasure, guys. Take care.
Yep.
Thanks, JR.
All right, well, Dennis, we've got about 7 minutes left.
Yeah.
I've been waiting to hear your acronym.
I know, and I'm going to make you wait 2 more minutes because we haven't mentioned the Juniper news here yet. So there is a rumor here, still just a rumor, I believe coming from Wall Street Journal. I think it was WSJ. I can't remember now. I didn't look. I'm pretty sure it was WSJ. HPE rumored to be buying Juniper in a $13 billion deal. Juniper is trading up 20%. If you're looking at the other networking stocks, the smaller ones, not the Cisco's, because nobody's coming and buying Cisco. CIEN is trading up here this morning. Another one that was trading up earlier was Arista Networks. It's trading down now with the overall market. F5 was trading up last night. FFIV, it's trading down here now too. Just giving you some potential pure plays here, though. Just a rumor here right now. Juniper is trading up near 39 last night, starting to leak because nothing has materialized here yet. But a big pop for Juniper Networks here this morning.
Yeah, you can see it here. We're still on the monthly chart. I'll go to the daily. I mean, basically, let's go to our Benzinga Pro in the news here. HPE nears $13 billion acquisition. So wait, where's the? What do you know? What the?
It was WSJ. It wasn't a press release, so you won't have that in there. It came from WSJ.
No, I know. I was looking for the share price though.
No, we don't have that. I
don't have that.
It's at $13 billion.
Okay, because I was curious to see how close the stock is trading at right now to that acquisition.
Well, let's go
target.
look. Actually, we can probably figure that out quickly. Just get the current market cap of.
Yeah,
and it's definitely not at 13 billion. So we're just going to try to grab the quick market cap of it. 9.5 close. So 10. Actually, my system does an update here too on the pre-market pricing. It'll be updated immediately. So I'm just looking shares outstanding 300 million up. So it looks like it's up $6 on 300 million shares, 6 times 3, 2. So it's about 11.5 trading right now. So about 1.5 down from that $13 billion price tag. Another 1.5 would put it up another 5 points. So it looks like the price would be 41 or 42 if I'm doing my math right. Probably about $42. So you're trading not quite to there. Obviously, it's still just a rumor, so they're not going to trade it right up to all the way and give you it all. But if it gets taken out, it's probably at a price tag somewhere between 40 and 42, I would think.
What is HPE? And this is what you see this
Yeah.
happen often with the stock trading down about 7%. What does HPE even do? I mean, I'm surprised that the
No, I know. That's just surprising to me too here. I'm like, this is out of the blue here because one, I didn't even know HPE was big enough to buy Juniper.
That's what I was thinking too. I was gonna say, like, how you'd figure the market cap.
HPQ legacy. This is the spin. So Hewlett Packard spun off their services business as HP Enterprises a number of years ago. So I believe it's Hewlett Packard's services business. I didn't know they're into networking here. So I mean, interesting that they're coming in buying or looking to buy Juniper Networks here, but I guess they're looking to expand in other areas. So interesting one, but they're hammering HPE on this. Obviously, they know this isn't going to be a cash deal because HPE isn't that, so it's going to be a stock deal. 100% going to have to be a stock deal in order to pull this off because they aren't big enough to just throw cash at this thing. So that's why they're hammering it already just on the rumors that this is going to happen. So down 7% here feels like a bit of an overshoot just because it hasn't even happened, the deal yet. I mean, this stock, maybe it's going to go down further if it actually does happen, but a lot of bad news priced in here now.
Yeah, I mean, the market cap of Juniper is basically half of Hewlett Packard. So anytime a company, I mean, look, Hewlett Packard's market cap is $23 billion. Juniper's was like 9.5. So anytime you have a company that's acquiring a company for half of its current market cap, like that acquisition better work out for your company and better be a huge business driver. Otherwise, you just, I don't know, you're just diluted. I don't know exactly. I mean,
and HPE has been a dog for a very long time. I mean, this stock has gone nowhere for 5 years. So to Spinner's point, maybe they're just trying to figure out how to increase their growth a little bit here because HP has been an absolute dog.
Yeah, well, all right, Dennis. Now we've only got
we had delayed it long enough. We kept you guys in the dark here. So my acronym NASA. You guys all know what the N is. We actually had a couple people get it right the entire thing last night. I should give them some props here. But my notifications are all here. I got to go find the one person that got it
NASA,
right. Intern got it right, and also it was Anthony Latito on Twitter. Thank you, Anthony. He got it right as well. So first one, you know what the N is. You all know what the N is. It's Nvidia. So I mean, yes, I'm chasing here. I'm still long Nvidia. I'm along all 4 of these stocks too. So my acronym is N Nvidia, A AMD, S SMCI. Full on AI trade here. Full on AI. I'm all in AI. And then the 4th one though is Amgen. I just bought Amgen. So I've got the NASA, NASA going here. And reason is I think we're still going to have AI as the driver this year. I don't know if it's going to be this killer year where everything's just going up, but I think we're still going to have an AI story. So I'm sticking with the AI story. And I also believe the Amgen story is going to have the weight loss drugs. They got multiple drugs they're working on here. I think Amgen's going to be a story too. So Nvidia, I'm not saying I'm going out and buying it here today. I'm already long all these stocks here, but on dips, I would absolutely be a buyer of Nvidia. People believe it is overvalued. I don't believe it is overvalued. I believe Nvidia is eventually going to be a $2 trillion company, and that would put it at a market cap of almost a stock price of nearing $1,000. So I think it's not out of the realm of possibilities that Nvidia, not this year, I don't think it's happening this year, but I think Nvidia could eventually be $1,000 stock. And people are going to be shocked because they think Nvidia, the PE, it's trading at 68 times earnings, but the forward PE is only 26. They keep growing and growing and growing. I mean, you could see it growing into that multiple. Dan Niles on CNBC, fantastic. He's one of the best people they get on there. We're going to have to bring Dan Niles on this show sometime. He was talking about it too, comparing, last night he was comparing Apple to Nvidia. And he's saying, do you want to pay 28 times for Apple, growing revenue at less than 5%, or do you want to pay 26 times for Nvidia, growing revenue at 30 or 40%? He's like, it's a no-brainer for me. He says it's Nvidia, and I'm with him here. He is the main reason, Dan Niles, that I bought the stock back at 400 in October, because he gave that same argument. And you know what? He's been right, because the stocks went from 400 to 520. So I think Nvidia still has more room to the upside, believe it or not. Is it going to pull back? Are there going to be dips? Is it getting hit on the overall market here today? Yes. But I think the path of least resistance for Nvidia is still higher. AMD is just a piggyback trade off of Nvidia. I think AMD, Lisa Su, you cannot bet against her. I've been long AMD since $95. I think it's still got upside here as well. I think AMD will eventually make new all-time highs. SMCI, again, is a pure play on AI here too. Smaller market cap stock. So this one is, it's a tougher one. It's way more volatile, really moves around. So it's a little bit of a wild child. And then obviously Amgen, we've already talked about, has the weight loss drugs. And I think the valuation is reasonable in Amgen, trading only about 16 times earnings.
Yep. And I mean, with Nvidia, Dennis, I this is one of my, favorite just all-time stocks. And what I like about Nvidia, and like you said, there are going to be a lot of people out there that right now say, oh my God, this is so expensive. First of all, if you're just looking at the PE and saying, okay, the PE is high, I'm not going to buy this because it's expensive, you would have missed out on, Apple in 2010. All these tech stocks a lot of times trade at higher valuations for a reason. It's not just because
they're growing the earnings into those multiples. We
And
heard this on Amazon forever. Amazon is not justified to be trading 85 times earnings back in 2010. And what did the stock do since 2010? You can bring up your long-term chart. Has only went up like 1,000% since then. And the PE is now down. The PEs actually went down because the stock price didn't go up fast enough for the growth of the company. The company just grew so fast. I mean, I just ballparked that out of the head. But 10 years ago, where was Amazon? Yeah, 10 years ago, Amazon was about $15. It's $150. It's up 1,000% here in the course of the last 10 years. And the PE can say, oh my gosh, it's still 70. Well, they're still growing like crazy here too. And again, we know that they've always invested in the top line and not the bottom line. So, I mean, that has always harmed their profitability to a certain extent. Is there stories that could make this acronym for me not work out? Absolutely. Am I a little bit too levered on this? I considered, moving the S to something else and not SMCI because I'm all in the AI trade. But I've been talking about this. I've been talking about the AI trade. These are the stocks in my long-term portfolio. I'm going with my long-term portfolio. I bought Nvidia back in October. I bought AMD back in the summertime. I bought SMCI a while ago, and I recently bought Amgen last week. So I'm sticking with these stocks. They're in the long-term account. They're not going anywhere.
There you have it. NASA, again, you've got Nvidia, AMD, SMCI, and then Amgen, of course, rounding it out. But yeah, what I was going to say about Nvidia is just I always like to take into account the long-term outlook of a stock as well as the short-term. And I think in the short-term for Nvidia, even if you have rates going back up and you have companies and investors more focused on, okay, we got to buy companies that are making money now and growth is out of favor. Nvidia has enough underlying demand right now for its chips. Nvidia was selling every single chip it produced for the past 2 years when the semiconductor shortage, supply chain issues were going on. There's enough demand for its products right now to where I think there will be a defined kind of floor in the price, right? Where even if growth goes out of favor, the stock's probably not going to drop much below. I'm not going to throw an exact price out there, but say 450, just because of how much people are, need these chips right now. And Nvidia is still first in class, best of breed. And then long term, like you said, the growth is there. The growth is coming. It's just more of a matter of, do you think
growth is going to continue to come?
Right.
I look at Nvidia's market cap at 1.2 trillion, and that is a huge market cap. But you just think what is going to be the driver? Think about where we're going. If you really believe that AI is like the internet part 2, who's driving the bus for that? Is there going to be other bus drivers? Yeah, but is the obvious one Nvidia? It is. It's obviously a bus driver. It's not out of the realm of possibility. Not saying this is going to happen, but it's not out of the realm of possibility that Nvidia could eventually be the most valuable company in the world. It's not out of the realm of possibility. If that happened, the stock would triple. So I don't know. That would be like a $1,400 stock for that stock to be the most valuable company in the world. It's possible. I'm not saying it's going to happen, but it's possible. But I think at a $1.2 trillion valuation, 26 times forward earnings. Again, there's some pull forward. Again, the margins, I know the bearish arguments here, but the flat out argument that's just overvalued just doesn't hold water here.
Yeah, 100%. I mean, I again just expect that growth to continue. I said this a couple weeks ago that would I be buying Nvidia right here? Could there be a pullback in the near term? Sure, yeah. But am I very confident that 10 years from now the stock's going to be trading well higher than it is today? Yes, I'm very confident.
I think so.
Not
and
investment
again,
advice.
my long term might not be 10 years. My long term is probably a couple of years. But I think we're going into this AI boom. And these three stocks, like SMCI is an iffy one. It's kind of the speculative one of the group. I had to throw one in there. And let's be honest, I wanted an S. I kind of had it going there. So I was like looking at my portfolio and I was like, I'll do it. I'll do the SMCI. So it's kind of the one I'm not as convicted about. But Nvidia, I'm very convicted about. Amgen, I'm very convicted about. AMD, I believe in Lisa Su. I'm a big believer in Lisa Su. So I'm convicted about her as well. And then SMCI is like, you know what? I'm piggybacking on the AI story. It's got the AI story with it. Let's go, NASA.
Let's do it. Well, Dennis, 9:06 a.m. It's time to wrap it up. Great show today. We're going to be back tomorrow. We're going to be talking some healthcare, JP Morgan healthcare conference tomorrow, some biotech stocks. Going to be an exciting show. We're going to have Joel back, newly crowned national champion, Joel Elconin. So, again, thanks for everyone who tuned in. Please smash the like if you haven't already, and we will be back tomorrow.
We'll be right back.